there, meet Larry Williams. He's not your regular trader. This pro managed to transform $10,000 into a whopping $1.1 million in just a year of trading. Yeah, that's an unbelievable 11,300% growth. Now, if you're anything like me, you're probably wondering, how on earth did he pull that off? Well, guess what? I went on a quest to find out exactly that. I scoured the vast expanses of the internet to uncover the trading strategy behind those jaw-dropping gains. And let me tell you folks, I struck gold. I unearthed the exact playbook Larry used to achieve these mind-blowing results. And I've got to hand it to Larry. He's an absolute genius for devising this strategy because it's incredibly effective. And you know what? I'm not keeping this gem to myself. I'm sharing it with all of you right now. But before that, I really appreciate it if you like my content. Just hit that like button. By doing that, the YouTube algorithm is going to show my video to more traders like you, so they can also take the benefit out of my contents too. But hey, you can just subscribe if you haven't done yet, and by turning on the notification bell, you're going to be the first to be informed when I'm uploading a new content, which I'm doing on a daily basis. Alright, let's dive into it. The technique he employed to achieve these incredible results is called the LW Volatility Breakout Strategy. LW for Larry Williams. Of course, it's centered around a particular indicator that's key to whole thing. And that indicator is none other than the on-chain channels indicator, which I talked about that previously in my previous videos, but this one specifically is based on Larry's strategy himself. Before we get into nitty-gritty, here's how you add it to your chart. Head over to the Indicators tab, type in on-chain channels, and give that one a click. Now the on-chain indicator on its own is decent, but we've got to tweak its setting to make it work just the way we want. Go to Indicators setting and change the length to 96. Oh, and while you're at it, hop over to Style tab and change the line colors to red. That way, they're a breeze to spot. Here's the kicker though. Every single setting I'm about to spill is tailored specifically for the 5-minute time frame, the exact time frame Larry used for this strategy. If you're thinking of dabbling in a different time frame, well, do yourself a favor and run some tests with various indicator values. Alright, onto the good stuff. Picture the on-chain indicator all on its own. You're looking at 3 lines. The middle line serves as a short gravitational point for the market, or let's say the mean point. Price tends to gravitate towards it like a magnet. It's not just a mean reversion point though, it's also a handy tool for gauging the chart's momentum. If the price hangs out above the line, things are looking bullish. Conversely, if it's below the line, we're in a bearish territory. Now, those upper and lower bands, think of them as superstars playing the roles of solid support and resistance levels. Price frequently hits these levels and often bounces right back. But here's the kicker. We can also treat them as launch pads for breakouts. If price boldly breaks that upper band, chances are it will break soaring higher. And you guessed it, that's exactly how Larry played it. But you know, there is a Tennessee wrinkle in this seemingly foolproof strategy. Wait, scratch that. It's a pretty big wrinkle. Allow me to break it down. The typical plan is simple. When the price breaks that upper band, you jump in for a long position, set your stop loss below the middle line, target a 2-to-1 risk-to-reward ratio, and boom, you got a winner. But, and here comes the twist, things get tricky when the market decides to consolidate and move sideways. When that happens, those upper and lower bands cozy up to each other, just like they're doing right here. It's like they're particularly holding hands. And when they're this close, even a small movement without much oomph behind it could break them. And guess what? That's a false signal that could throw you off your gem and cost you a trade. Ain't nobody got time for that. So what's the solution, you ask? Well, it's all about quality control. We need a way to filter out those low-quality trades, so we're only chasing the ones with some serious gusto behind them. That's where not one but two additional confirmations step in. But before I spill the beans on those, let's take a quick break. It really matters that which cryptocurrency exchange you're using. I highly recommend when you want to try any new trading strategy, you must backtest it. Or if you don't like backtesting, you can just use demo trading, which is available on Bybit. Previously, I made a video about it. I don't want to make it so long, so you can check it out and learn how to do it. But here's the kicker. I have a surprise for you. If you use my affiliate link down in the description, you have the chance winning up to $35,000 worth of USDT just by signing up, doing your KYC, and depositing at least 100 USDT and start trading on it. So what you waiting for? Maybe it's going to be your lucky day. Introducing the LWTI or Larry Williams Trade Indicator. This one's all about confirming those big moves. Tweak the settings, set the period to 25, higher numbers, hunt for longer trends. While if you're interested in short-term trends, smaller numbers are your friends. For the 5-minute time frame, 25 seems to hit the sweet spot. And don't forget to smoothen things out with a smoothing period of 20. Now, for a dash of simplicity, add a humble volume indicator to the mix. I know it's not the flashiest tool in the shed, but trust me, it's a game changer. Open up the settings, add the MA length to 30, and head over to the Style tab, tick that box for volume moving average, and paint it to your own taste. This bad boy is gonna help us separate the men from the boys. Those with real market momentum from the ones just trying to fake it. Alright, let's unravel this strategy bit by bit. And hang tight, because at the end, I've got a secret trick that's gonna take this whole strategy to the next level. First things first, stick to that 5-minute time frame. Ready for long trade? Here's the scoop. Step 1. Wait for the price to cozy up and tap that upper red line. Now, the next checkpoint, the LWTI indicator, is gonna be proudly sporting the color green. And if it's flaunting red while rubbing elbows with the upper band, sorry pal, that's a trade you're gonna skip. Lastly, give those volume bars a good look. They need to be above the moving average line. And yes, you've guessed it, rocking the color green. That's your sign that the market's not just dozing off, there's enough volume to make this trade worthwhile. Oh, and here's the deal. You're only entering the trade if all 3 of these stars align in the sky. That's your green light to dive in, and you do it right here. Hold up though, your stop loss ain't set in stone. It kinda depends on the scenario. Usually, you tuck it right under the middle orange line, but oh boy, there are those times when the upper and the orange line do the Grand Canyon thing. You know, when they're miles apart, that's the case, slapping your stop loss here would be overkill. Instead, it's a smarter move to place it at the most recent string low. Like so. More often than not though, that middle line's your best bet. With your stop loss locked and loaded, it's time to set your take profit. We're talking a classic 2-to-1 risk to reward ratio. And voila, you've got yourself a trade that's not just promising but profitable. Alright, let's flex our strategy muscles with a short example before I unveil that secret trick that's gonna have you grinning ear to ear. Ready? Here goes. For a short trade, wait till price reaches down and kisses that lower band. Now, glance at LWTI indicator. It should be winking at you with a red light. Lastly, check out those volume bars. They should be above the MA line and oh yeah, wearing the color of the bull's rival, red. And where do you enter? Right here. Got it? Great. Now, your stop loss. Same deal, depends on the situation. Usually, it's above the middle line, but hey, exceptions happen. When you've got a major gap between the upper bands and the orange line, like the situation here, placing your stop loss at the recent swing high is the smarter move. and your take profit, the 2-to-1 risk to reward ratio rule still applies. And now, my friends, it's time to let you in on that secret trick. See, there's a tiny hedge in this strategy when it's rubbing shoulders with a major support or resistance. Let's say you've got all your indicators cheering you on and you dive into a trade, only to have it nosedive unexpectedly. Well, chances are it's all happening near a sturdy level that's pushing the price in the opposite direction. So here's the lowdown. Hop on a higher time frame, like the 1 hour, and map out all those crucial support and resistance levels. Once you've got your landmarks locked down, steer clear of trades that are getting too cozy with these major players. If it's dancing right next to one of these major levels, just let it pass by. Actually, you know what's golden? Jumping into a trade when price is breaking through a resistance level just as all the indicators line up. Now that's a sweet spot where confluence and bullish momentum collide in the best way possible. And here's my surprise for you. Previously, I made almost an hour of video completely about proper risk management, how to do your proper position sizing, risk to reward ratio, winning ratio, whatever you need, whether you're a beginner or a pro, but you're kind of confused in between what am I supposed to do, this is probably for you. So give it a try, watch it. You will come back to me and you will thank me without any doubt. Also, if you want to increase your profit factor on the other side of the coin, beside the risk management, I highly recommend to watch this video of the mixture of Fibonacci retracement levels with supply and demand, or let's say price action, and you're going to find it crazy good with any trading strategy. It doesn't matter what trading strategy you're using, what is your indicator, what are you doing. This combination works out on any time frame, any trading strategy, and it's crazy good. I tried it out like thousands of times and it works out perfect. So there you have it, folks. Pair this strategy with some basic support and resistance, or even sprinkle in some supply and demand. It's a recipe for trading success. And if you're itching to master the art of drawing the most perfect supply and demand zones for this strategy, I've got you covered in this video. And if you're looking for more trading strategies which are really awesome and powerful, make sure to check this playlist right here and you're gonna enjoy them. Come back to me and thank me, I'm pretty sure about that. Thanks a ton for tuning in, and until next time, happy trading.